Good morning. It is Wednesday. It's hump day, January 17th. Markets yesterday, not a great day. We started, opened up yesterday on Qs at 408. The high hit 411. Low is 406. That's in the morning. Afternoon, we closed at 409. Remember, we started the day yesterday at 408. We closed at 409. So if you're looking at daily candles, it was up. It was green. You went to 411, but the afternoon was weaker. So you're starting to get this little button hook that I talk about all the time. If you want to know what a button hook is, go over to the Daily Stock Pick Substack. This is the daily newsletter. There's an education section down here. Confirmation, MACD button hook algorithm. This week I did cross up RSI. I have probably a 5 to 6 part series in that education series that comes along as a paid subscriber. It's not that much money. You get a free 7-day trial. So if you don't like what you read, just, undo it. But the rest of the newsletter is absolutely 100% free. 100% free. And I mentioned yesterday a few things, but let me talk about TrendSpider in particular. I got this email last night. This is from, I guess I wasn't paying enough attention to the blog, but TrendSpider mobile apps for Android and iPhone, they're getting a huge upgrade. I tried the new one last night. Oh my freaking God. I like it. I like it almost as much as I like Webull. Now understand, I don't have my brokerage connected. So I do not have my brokerage connected to this, but the amazing part was it was almost as good as Webull, but it had my 4-hour algorithm, it had my watch list, it had charts, it had everything that I needed on it. But I realized that my computer screen in TrendSpider here does not work on my phone. So even if I turn it sideways, it just does not work on the phone. So I'll have to work on that and maybe I'll do a newsletter about how I'm trading on my phone. I do not have my brokerage connected to it, so I don't actually trade it on the phone versus Webull. I am able to look at the charts. I love Webull. If you don't have Webull, go over to the link tree right here, and it's the third link down. Join Webull, get up to 75 free stocks, depending on the day that you sign up in the offer. But it's great. And if you go to the link tree, just make sure you can check out TrendSpider. The plans are pretty simple. It is $1,488 for the year. But if you can't make that much money, then you're probably just not trading as much money as you need to justify the tools. But the link tree also has a section for Seeking Alpha. We'll go over Seeking Alpha, how I used it today to look. But the Qs, you can see the MACD's crossing up. We're still there. We don't have confirmation. Yesterday, it kind of lost a little confirmation, makes me a little bit nervous. But the Qs that I bought into, I am not getting rid of. It is a long-term buy. I did not buy this considering, oh my God, we're going up. I bought it at about 408, I think. We're only at 409. So I'm not going down. My algorithm here said buy it. I bought it at 408 instead of 407. My algorithm over the past 24 months makes you 24% versus just buying and holding makes you 8%. I think we're going to all-time highs. I think this year will be better. I am dollar costing my average way in, or dollar cost averaging my way in, whatever. But for me, what I'm seeing in the market is that bonds are taking over. And if we go to Seeking Alpha and we look at the 10-year bond in particular, we're back over 4%. I'm going to look at 10-year bond. And we're back over 4%, and they are rising. So when I look at these, the bond rate, oh, come on, I don't want the bond 10-year year bond. Oh, why am I doing this? 10-year bond. It's not, I know it's there. 10-year bond. Let's just search. See all results for 10-year bond. Analysis of the bond market, symbols. I think it's one. I forget what it is. It's there. It's in Seeking Alpha. Treasury. Let's look. 10-year Treasury. Treasury yields. Let's look at Treasury yields. Yeah, there's the 10-year. 10-year Treasury yield right there. US 10 YR. That's how you look it up in Seeking Alpha. I just don't know my way around the chart. But here you go. Here's the year to date. You can see as we're going up, the market went down at the beginning of the year. Then you started to see the market go up as the bond went down. Then now you're starting to see the market go down a little bit. Still piling into the NASDAQ. Mortgage applications still continue to be good. But 4.1, it's a little bit high. If you want to look at some of the 2-year and stuff like that, you can go over here. We can look. Here's the 52-week range. And when you look at the 1 month, we're up. Look at where we are in the slider. We're right in the middle. And as we start to go more towards 5, you're going to start to see the stock market go down. So bond rates are just in focus. That's it. If we look at some earnings, Charles Schwab beat. Good news. I mean, if you're into Schwab, like I have been, I am not back in it. I believe I sold out of it. I haven't looked at my account, but I believe I did sell out of it during this run. I didn't sell out of it, prior. I may have sold out of it prior to this, but you can see it went down to 51. I think if you're in this one, we have no confirmation, so I wouldn't necessarily buy it today. It's down 3%. They had good earnings. I have to read a little bit more about it. But if you're in this one and you're looking to get for a floor or you're looking to get in, I would say $60 is your pivot point on this one. If you want to buy it under 60, I think you're fine. Are you coming for this gap? That was a gap on the upside, or I'm sorry, on the downside back here in September. So their earnings, they made 68 cents. You can see the MACDs crossing down. It's an oversold stock. Do I think long-term you're going up? I think this is a bank that's fine long-term. You broke the 200-day. You're probably going to start using it as support at 62. Right now, it's at $62 in pre-market. I think that's where you're going to go. You had the death cross. I don't think that we get back down to 50, but if we do have some bank structural issues, maybe you do get back to 50. But Schwab, their earnings today were fine. Now, the good news in the market is that retail sales heat up more than expected in December. The actual economy is stronger than previously expected. That did not do great for the market. Let's look at the pre-market in particular. You can see the Dow futures up here in Seeking Alpha. We're down about 1% on the NASDAQ in the pre-market futures. The S&P is down about 0.5%. You can watch all this stuff. I'll include it in the newsletter. I was actually playing on Savvy Trader this morning. And what I liked is when I went to the homepage, I could see Schwab was reporting today, U.S. Bank reporting before the bell. I can go over and look tomorrow. Taiwan Semi reports tomorrow. Now, the expected is $1.36. The previous year was 1.82. So the comps are going to be a little bit tough. I do expect this one. I would probably, this stock is in the core portfolio. I wouldn't buy into this just because of the elections that just happened and China plans on taking them back. So you're looking at a significant issue. But what I do like about Seeking Alpha, or before we go to Savvy Trader, Schlumberger is the other one that I want you to watch on Friday. This one expected 70. This is a services in the oil and gas stuff. So I do think that this one is probably going to post some good stuff. And this is a beaten down stock. If they're making more money, I would expect this one to make more money and be more apt to do. Look at this stock. I mean, if they're making more money than they did in the last quarter, I think you'll start to see. The problem is, look at this. They made 72 cents over here. They were trading at 56. Here they're making 78 cents, and they're trading at 59, which is justified. But they made more money, and they slipped from 58 down to 49. And they're at 48 right now. In pre-market, you're down 1. This trades with energy. Energy just has been a bad trade. So that one I noticed on Savvy Trader as well. The other thing I noticed, and I'll include this article in the newsletter, is all of these price analyst changes. I love this news. I geeked out on this. And Savvy Trader is free. You should sign up. I have 2 portfolios on Savvy Trader. I have a core portfolio, so you can see the 35, 36 stocks that I actually recommend. This one's free to subscribe to. If you want the trading portfolio, it's $25 a month. Here's the thing, and D-Man said this. I give you for free the trades that I do in the newsletter. Sign up for the newsletter for free. Or you can follow me on Savvy Trader. Either one, I actually do still do my trading portfolio when I do trade. If you want to see it, it's just TQQQ, QQQ, and some others. I still have Mara, still have Alta. We can look at the all-time stuff here. SMCI, still my greatest one. I think Joe got out at 350. I did not. I am adding more when it requires to add more. AMD, I've been in that one solid. Amazon was one of my largest positions. We can do, Amazon, I bought a ton of that. SMCI, I bought a ton of it. NVIDIA, bought a ton of it. Uber, bought a ton of it. DocuSign, I bought a ton of it. It's at 62. I'm up 1% on that one. Remember, that one is rumored to be getting bought. It has lost a little bit of its cachet here after that report. So I wouldn't expect it to kind of, completely come back. But once it starts to lose its confirmation, I may actually start to get out of this. But here's the thing. Understand, while it's still expensive, they make a tremendous amount of cash. We have confirmation on the weekly. It has been just beaten down. That 50-day is starting to turn. You still see between 50 and 60, that's where the large base of buyers are. That's where the large base of holders actually are of this stock. If we pull it back to when it was at its all-time highs, which is back here in 2021, the summer of 2021, you can see most people are holding it between 50 and 60. So my worst case would be that it would come back to 60. But I do like this price target on Savvy Trader, the news, things of that sort. Tom Lee, he thinks that the small and mid caps could make a 50 to 60% move and could end the year above 3,000. So where's IWM? And that would be the ETF that you want to take a look at is IWM. This is the Russell 2000. The Russell 2000 right now is at 187. In pre-market, you're down 1.5%. Tom Lee has been more right than wrong, and he also has said that the first half of this year is going to be choppy. This is a weekly look at the IWM. IWM has underperformed the other indices. And even though this year is expected to be small cap and mid cap, it has underperformed. You're seeing the MACD starting to cross over. It has been oversold. But if we get back to the 239s, the highs of November 2021, you could see this one, start to move pretty well. And you do, how do you play small caps? I don't know small caps. I think on Twitter, Shea Boular. He's a good small cap guy. He's got some good stuff in there. But Russell, if you want to see his, I will link in the newsletter to this interview with Tom Lee. It's about 2 minutes. Fantastic interview. Spirit Airlines. If you have had the pleasure of flying Spirit, my condolences. But they plunged 47% because the judge said, the judge in particular said to all the Spirit airline customers, you're welcome. He said that this would stifle competition and increase prices. Spirit's symbol is SAVE. They are looking at either bankruptcy or another buyer. But you can see this chart is ugly. You do not have confirmation. The afternoon traded a little bit better because you went from the opening of $6.58 to a high of $8.38. You can absolutely trade something like this. You can look for it on a 5-minute chart. You can trade this. Any volatility like this is solid. Solid trading opportunity. If you go to a 5-minute chart on this, let's just take a look. We'll go to a 5-minute chart. You can see you had opportunities to get into this with confirmation. Again, if you use these, you see these Bollinger Bands on the way down. If you had bought here, you didn't have confirmation on a 5-minute, but you had a MACD cross up right here, trading at $7.45. You went all the way up to $8.16. Solid trading opportunity. Now, my algorithm on a 4-hour, ironically on the algorithm, it had you out here with a nice 66% gain. You didn't get sucked into this judge's ruling. Solid stuff. Okay, sorry, I got off there on YouTube Live. I had to. The dog was crying. I had to put her under her blankets. But where I was commodities. Mark Fisher was on. He believes that nat gas, which is oil, will triple at the end of this week. He doesn't believe that right now. He says, hey, it's not going to triple right now, but he says long term we should see it. It's just too low. Again, that's his thing. Natural gas right now is down 4.1%. Oil is down 1%. Remember, oil is a triple levered ETF. You do not want to get into this one on a long-term basis. It is a decaying asset. You do not want to do that. He thinks for oil, which he says he would not buy UCO. If we look at UCO, remember oil, if you ever want to see these commodities, go to the bottom left in FinViz. You'll see crude oil, natural gas, gold. You'll see the Dow, S&P, and 100 as well. But you can, those are the futures. He does not believe you should buy the actual futures, which is UCO. This is an Ultra Bloomberg crude oil future. It's a triple levered ETF. Right now, you're down 3.47%. He thinks you should play the actual refiners. MRO is one of those. Marathon Oil, we're down 1.5%. But what I wanted to show you was how you use Seeking Alpha. Say you don't want to buy the oil UCO. But, you hear somebody say, hey, MRO might be a good one. Well, Seeking Alpha has this great option over here on the right. You can see how they rate it from the Seeking Alpha analyst to Wall Street to the quant rating. Quant says hold. Well, what's a better one down there? Well, when you look at the quant ranking down here, you can see ranking by industry. 24 of 69, I believe. Yeah, 69. And you can go over here, and I'll include this in the newsletter. So, if you're not a Seeking Alpha Premium subscriber, I'll include the top 4, which is SWM, which is EOG, which is EQT, and Coterra. They all have high quant rating scores, and you can see the growth over here, the profitability, all A. Chesapeake Energy, A. Quant valuation, B+. This top one, A+. Growth is C-. So Southwestern Energy, these are all in top oil and gas production stocks. Another one that he suggested was VLO. I think somebody else on the panel actually suggested this, but this was VLO. And if we look at this, it's got a quant rating of 3.3. Wall Street says buy it at 4. It's got a growth of D. Well, if you want to see others, this one is in particular is ranked number 7 of oil and gas refining and mining stocks. And what's number 1? Rex. What's number 2? PBF, PSX. These are ones. Oh, and you get the pleasure of hearing the dogs in the background. Hold on one second. Man, I am going to have to edit this episode left and right. But here's Seeking Alpha. And Seeking Alpha, solid tool. This is just an example of what you get. And when you sign up through me, you get a $50 off coupon through the link tree. So I think it's $189 a year. If we look at MRO is not a buy in the algorithm. I do not want to tell you to buy that one. VLO, I think it's energy. I think energy is very weak. I would probably not go into this sector. But if you wanted to find things, then that's a way to look at it in Seeking Alpha. On this same panel, Josh Brown yesterday, who I absolutely think is a genius when it comes to some of his stuff, he said cybersecurity stocks are part of the core that you should absolutely be invested in. In the core portfolio, I have PanW, Palo Alto Networks. I had CrowdStrike in my own personal portfolio. I have not gotten it. One that he brought up, which is actually one of the oldest cybersecurity stocks, is Checkpoint, CHKP. It's 17 times forward earnings. You can see the algorithm right now has you in this run from 136 up here to 156. In 77 days, you're up 14% in this name. Now, the MACD is crossing down. It's about to cross down. The RSI is a little bit extended. So I don't know that I'd necessarily get in there. But if you want to take a look at Checkpoint and the other ones, you go over to Seeking Alpha, you type in Checkpoint, CHKP, and you take a look at the Wall Street analysts. They say buy. The Seeking Alpha analysts say buy. The quant says hold. Well, what the valuation they say is a D+. A lot of these, we went over it yesterday, how earnings per share and PE is not something that you should trade on. You should look at this. Now, ranked in industry, 17 of 48. This is software. They put them in as software. I brought up Frog before. I like Frog. It's a D+ on valuation. Path, I like Path. It's a D+ on valuation. Fortinet, another cybersecurity stock. This is one with a quant rating. So you can look at these. CrowdStrike right down here. Now, remember, we were looking at Checkpoint. Checkpoint is number 17. You can take a look at some of these other ones. Another one that's Josh Brown brought up was Cyber down here, CyberArk Software. He says it's currently breaking out. You can see the seeking analyst said buy. Wall Street, strong buy. Quant says hold. The valuation is F. But if we go over to the chart and we look at CYBR, CyberArk, we can see this breakout has been solid. Let's just chart where we are. It just had one at 213. It's up at 228. You just got out of a 29% gain. Now, mind you, the algorithm on this one doesn't work great because it has been just a down and up stock. Let's take a look. The reason the algorithm hasn't worked really well, you're in this kind of phase here where you're just but it's breaking out. And Josh is right. Those Bollinger Bands are expanding up. If you take a look at this, there is no volume up here. I would be very concerned about being up here because most of the volume is down here at 150. But sometimes, a stock can take off like this and be fine. So, again, use the tools that you have at your disposal to find stocks like this. I'm just showing you how I look at things in using Seeking Alpha and TrendSpider. And that will be all of what I just did will be in the educational series in the educational series. All of this stuff, it will come to a screaming halt. It will come to a final conclusion of this is what I do. Ted from, we're on our Socialist Crest. Ted from Spotify asked me CLS. What is CLS? Celestia? Celestica? Inc.? Let's look at this one. Algorithm has you out. Algorithm makes you 94% versus a 146% asset performance over 24.4 months. Your average win is 21.99. So the algorithm provides you some protection, doesn't do as well as buy and hold. We can see if we bring it back here, it looks like you're maybe at all-time highs here. Let's look at a weekly just so we can go over FinViz to look at it. Yeah, you've had your breakout. You've got no volume here between 20 and 13. So it is in this breakout. If we look at this from I mean, it's hard to tell, but if I take it back here, that volume gap scares the hell out of me because if you start falling, you are seeing the MACD is super high up there. The RSI is at 65. It's coming off of a super oversold right before their earnings there. Again, this is a weekly one. CLS, let's look at CLS here. What do they do? Electronic technology. They have a $3.93 billion market cap, income of $202 million. They have a P of 16, so it's not crazy with the valuation up there. Target price is 32. Your 52-week range is between 10 and 30, so you're 6% off. In pre-market, you're at 28. It's a bit extended. Performance over 1 year, 124%. You can see the most recent was July. They didn't put a price target on it, but July back then, RBC did put a $22. In July, they put CIBC put a $25 one on there. If we go down and we look at the insiders, no insider stuff. They have 137 million shares floated. Not a ton of shares, but I think you're fine with that one. Let's see from Seeking Alpha, CLS. We'll look at CLS right here. CLS from a quant perspective and a Seeking Alpha and a Wall Street perspective, strong buy analysis. That's from Sunday, January 14th, Wednesday, January 3rd. Looks like all buys. Here we have buy, strong buy. So Celestica, Ted, it's a solid buy. I just think you're running into those all-time highs. It's a little bit concerning, but if you're in it, hey, ride that stuff there. PAC-B, which is Pacific Biosciences of California. This one has had a recent, again, this is probably biotech. PAC-B, let's see. PAC-B. I mean, the chart looks ugly. I wouldn't expect it. Yeah, they're losing $309 million, $1.72 billion market cap, 267 million shares outstanding. Price to sales, 10.13. You're banking on some news. So trade it. I wouldn't necessarily own it. Look at these guys selling it. They sold it at 241,000. These are some insiders. Doesn't say who they are. The director sold May of last year. I mean, they're selling it rather large. Christian Henry, he's selling about $1 million worth. So, I mean, it's a lot of selling. I don't know that I'd necessarily look at this one and say, hey, it's worth the $12 that analysts say. They put an $11 price target. If you want to trade it, go ahead and trade it. Let's look at 3 I's from Spotify. INQQ, not IONQ, INQQ, which is Exchange Traded Concepts Trust India. This is probably on the Indian market ETF. India has been going really, really well, and you can see $12 here. You're up at 14. INQQ, let's see if they have anything on FinViz about it. It's an e-commerce from India. It's up 2% year to date. It was up 30%. I would go over here to Seeking Alpha. This is where I'd do the investigation on this one. INQQ, you can see it's got nothing from a momentum A+. I mean, just the economy in India is doing well. But the expense, D-, because you can look at the expenses. It's an expensive ETF, 0.86. What are you kidding me? Why not just buy, some Indian, look at the holdings and go over to India and buy it. Reliance, Baja, just go buy those. Buy some of these, pick your favorite and buy those. INQQ, I think it's a solid one. But, again, when you look at this chart from a long-term perspective, it's just because India is doing well. When India starts to crash a little bit, you're going to see this one go down. So 3 I's, that's my take. The guys at Bullish Bytes on Instagram, it's bullish_bytes, I believe, BYTES. Now, do you mind taking a look at Infosys tomorrow? Let's look at Infosys, and I'll read you what they said, because they did some INFY. They said it's traded on the NYSE and Indian Stock Exchange. Seeking Alpha gives it tons of buys. So here's Infosys. You can see the algorithm got you in at 1893. You're at 1946. That's probably some type of news event, I would say. It looks like you may be at all-time highs, and there's a gap here. And so, 1895 would be where I would be concerned with a floor. If we look at a weekly here, you're just above your 200-day. So your all-time highs here are 25. If we go over to FinViz, INFY, their PE is 27. A little bit expensive. Nothing crazy. They're a market cap of $80 billion. Their price to sales 4.36. A little high. I mean, they're up year to date 5.93%. For the last year, they're up 5.82%. So you're buying it at about the price that you were, 5% above where you were last year at this time. Over 6 months, they're up 12%. So you can see it's been on that earnings high. 2.6% dividend, average target price 1973. You're trading at 1949. So your upside is probably limited, I would think, but like they said, Exane, and this is why they wanted me to look at it. Exane BNP Paribas, they put a $24 price target on it. So from 19 to 24, probably not a horrible move. You don't have insiders selling it, but since they mentioned Seeking Alpha, let's go over here. Infosys. Infosys is INFY. And we can look at some of the Seeking Alpha. The Seeking Alpha analysts have it as a hold. Wall Street has it as a buy. Quant says hold. I see the last 2 analysts over here say hold. It's ranked 11 out of 26. Let's see in the sector. It's IT consulting and other services. DPSI, is the number 1. And we can look at this one. Here's the other thing that you can do with the quant rating is you can go and take a look at the quant with this particular stock and when it moved. So this DPSI just got upgraded to a strong buy here on the 12th, 11th or 12th. So DPSI is a recent one, and you can set alerts for your favorite stocks when they change in Seeking Alpha to this one. But let's look at the DPSI. If we go over here, I like looking at some of the basics of this, of stocks. The PE is 16, so it's not crazy. Again, it's a software company. That's not crazy for a software company. They are making money. They are up 4% this year. Over 1 year, they're down 36%. So if we go and we look at the chart here, algorithm got you in at 619. It's 654 right now. You just got upgraded to strong buy on the Seeking Alpha. Where are you at long term? You're kind of just hanging around that 200-day. Your 200-day is still moving negative. But Infosys, what I would do is probably just take a look at some of the other ones in this industry. I'm not saying Infosys is a bad one. I just think perhaps that valuation is a D plus compared to others. The ratings here, you can take a look at the ratings. It's been a hold for a while it hasn't been necessarily moving. But the profitability is an A plus. So I think Seeking Alpha, it's a good one. My stocks are my dividend grade of safety is a D. We can go and look at the dividend history here in Seeking Alpha to see why it's a D. But dividend history, you can see they're paying as much. They're higher than they have been. That's probably why. Yeah, you can see 21 cents semi-annual, but solid. I don't think there's anything wrong with it. Doesn't blow my socks away though. From YouTube, Roscoe Carnage, ACLS. I don't even know what this is. ACLS. I don't see it. So ACLS. It's Axcelis Technology. 3.92 billion. I don't have a chart in it's a semiconductor USA NASDAQ. Let me see. I put ALCS. ACLS. Let's look at this. Axcelis Technologies. You can see it's button hooking a little bit on the weekly. We're down. Algorithm got you in today at 120.37. Algorithm makes you 66%. Buying and holding 2 years ago, you're up 74%. Even with this downward slide. If we take a look at a long term on this one, and again, the algorithm got you in, it's making you're kind of coming down. So I would be careful of this because right now we don't have confirmation. Those Bollinger Bands are still wide open. You can see them cinch up here in October. And since then, we've just been in a downward trend. So I would be very, very careful of this one because we're starting to get below this 119 price level. Between 119 and 81, there's no price. So everybody who's bought at 81 since it looks like February 2022, everyone who's bought at 84 or 81 to about 119, they're out. So this would probably put some selling pressure down here of these people who are saying, oh my God, I have to get out before it gets down there. So I'd be a little bit careful of that one. Roscoe Carnage, the PE is not crazy. I mean, for a semiconductor company at 17, year to date, you're 7%. There's something going on because downgrade, Bank of America Securities, they downgraded, they initiated in September and then they downgraded them. Now it's a $225 price target. The average price target is 163. If we take a look at the insiders, they're kind of selling and they're selling at 177, 180. And you're trading at 119. So they were selling up here. There were signs. Celia from Facebook, could you look at LPSN when you have a chance? It's an AI stock. LPSN. Is this a YOLO? Let's YOLO this mofo stock. I can see from the weekly it was trending down. The algorithm just got you out with a nice 7% gain. Algorithm loses you 67% versus losing 90%. I think this is one that LivePerson Inc. LivePerson I think is a chat software program for call centers. In fact, I worked with these guys and I know people who work with them. They are not making money. They have a price to sell of 0.6, so it's not crazy. They're down 15% year to date. Over 1 year, they're down 71%. Average target price $4.27. They were at $18 at one point. August, Roth upgraded them, $6 price target. I guarantee, you're seeing buys. I know people with inside knowledge of this. I mean, this is a 10% owner. They're just continuing to buy. The CEO in October sold at $2.45. Nothing crazy. I mean, I know some of these guys, so I know this company. They're losing money. I mean, it's $1.35 per share. So live person, I would probably stay away from this one because I don't know that it's a AI stock. It's more call center related from what I understand. It's a software company. And LPSN doesn't do a dividend. It's a strong sell from the quant. There's something wrong with this one. If you want to take a look at some of the industry, there's 191 stocks. One that, Salesforce, DocuSign. I mean, buy DocuSign. Somebody's going to buy DocuSign. Buy DocuSign. Buy PagerDuty. I would stick with these larger cap ones in software rather than going for the YOLO with something that like live person. It's not that there's anything wrong with it, but from this standpoint, look at that on a weekly. Do you really want to, risk? You even look at this. We're going to pull this back to where it started this slide, okay? It started this slide in September of 2021. And where are people holding? They're holding between 4 and 2. There's nobody that bought, the people that bought it up here or even during this rally right here, that's the next largest, but they're going to get out. They're down 50%. So, Celia, I'd probably stick with Salesforce, DocuSign, other things like that. Nevin from YouTube. It keeps putting your name as Kevin for some reason. I don't know why. Nevin. NRDS upgraded from Citi from 11 to 14. NRDS is NerdWallet. I'm a fan of NerdWallet. If you don't use NerdWallet, if you don't know anything about finances, you should absolutely be using NerdWallet. I'm a big fan of theirs. I think they provide great educational stuff. Ironically, NerdWallet, $14.34 in the buy-in in the algorithm. The algorithm makes you 31% versus just 9%. Which means it's holding you away from a lot of these drops. Like, look at this one. It got you out before the earnings right there with a nice loss, but it got you back in right at that price at about $9.14, and it got you out with a 50% gain right here. And you're going on another run here. If we look at this and we look at everybody that's holding it after, let's say, midway here, you got a nice volume shelf here between 13 and 14. NRDS right here. Let's see what their actual kind of fundamentals are. Average target price, $15.50. They are not making money. They're losing slight amount of money, but you may want to be in this one if they are going to make money. The problem is the forward PE, expected earnings, it's 56, which is incredibly expensive. It's down 1% year to date. It's up 44% over 1 year. Target price is $15.50. You're trading at $14.58. Most recently, again, this downgrade May 3rd. It doesn't have today's upgrade, I guess. But Citigroup downgrade from last year, May. They downgraded with a 15, but they only reduced the price to $14. NerdWallet announces winners. I don't see the upgrade in here. If we look at the insiders, there's some buying in September at about $8.40. Solid. I mean, this dude, the CEO, bought some on May 9th last year at $8. He bought some here at September at $8. I mean, obviously, he's doubled his money almost. So he's done really, really well in buying. That's why you want to look at insiders that are buying. Insiders that are buying are sometimes telling you, hey, this company's worth more. So Nevin, let's take a look at NerdWallet over here in Seeking Alpha, NRDS. NRDS, NerdWallet, stop. The Seeking Alpha analyst, it's all strong. The valuation is where they say, hey, it's a D+. Now, ironically, this one, Nevin, top consumer finance stock in the quant. There is nothing even close to it. So if we go back and look, let's see some of the Seeking Alpha analysts of it. Right here, NerdWallet, strong buy. That's from June, August, September, November. November 8th, strong buy. If you had bought on November 8th, let's see where you were at. November 8th, you were at $11. somewhere in that neighborhood, 1170, solid buy. I mean, dude knows what he's talking about. Could be going for another run. I like it. It could be one that you may want to put some money into. Now, talking about the strength of the market, there were some cross-ups in triple levered ETFs, and it does look like we are down in the market right now. SPXU, which is a triple levered ultra pro short of the S&P 500. This one gets you in at $8.68. Right now you're up 2% at $8.87. So XPXU, UVIXI. We talk about the VIX all the time. If the VIX is going higher, then you're going to look at downward pressure. And by the way, Schwab is now down 6% at $60. So buy it under 60. I think under 60 is a solid price for that bank. But UVIXI is identifying the VIX. And if we go over here and we just look at the VIX, VIX is the VIX, by the way. That's what you want to take a look at in Seeking Alpha. The VIX is at 15. And 1 year it's down 21%, but it's up 10% today. As of 9/32, it's up 10%. UVIXI is up 5%. It's a way to play the upward VIX. So it's a short-term futures. It's not the actual VIX, but for short-term futures. Now, another triple levered ETF that is on the S&P, Ultra Pro Short, SDS. You could do SPXU, you could do STS, whichever one you want. But they're both up a little bit. I would expect that the market recovers a little bit. What we've seen is this selling in the morning, and then throughout the day you see some type of recovery. To me, that just says, hey, the market is really trying to rebound. It's really trying. But there are just too many selling pressures in the morning to actually do it. People are trading, people are selling. You're looking Bank of America down 2%. You're looking at Apple down at 180 again, down 2%. Amazon at 151. Buy Amazon all day long under 150. Bank of America, Boeing is up 1.2%. It's hanging out there at 200. Google hanging out there at 142. So the market is telling you, hey, there's a problem here, but we're not sure exactly what's going on. And you're seeing it. You're seeing it just OSUR. You're seeing it. Now, one in my personal watch list that I found interesting is this one, sure, OSUR. It's an interesting chart because it just got you in at $8.13 here. If we go and we look at a long term on the weekly, you haven't crossed the 200-day. The 200-day moving average right here at 852, and you're trading at $8. You could be using that as as resistance. You're kind of seeing on the weekly, it's overbought. The RSI is at 65. The MACD is above the oscillator. It's about to come down. So I don't know that I'd necessarily use this, but put it on a watch list for yourself, because I do think when we go over here to Seeking Alpha, OSUR, you're seeing OneSure as a potential one. Quant says strong buy. And that's what I was looking at, is the quant says strong buy. The valuation B+, growth A. Everything seems to be A on this one. It is ranked number 1 out of 34 in its industry. And what's the industry? Healthcare supply stocks. That's not a COVID stock with a healthcare supply stock. So I put it on there on my list when it was COVID. It did go well during COVID. And then just like every other stock during COVID, it just sank. It just sank. We'll go back and we'll look at the COVID. Look, I mean, COVID, you saw this one just pop up. So I had it on my list. It was a COVID stock. I don't think it's a COVID stock anymore. Another one that came out of the blue that I think you could invest in and not see significant downside, but I do want you to buy it under $50 is Cisco. This is your way to get into a technology stock that is not technology. It's old-time technology, kind of like IBM. The algorithm loses you 29%. Buying and holding loses you 17%. In my opinion, if you buy this under 50, you just hold it. It's got a solid dividend. Cisco, if we go over here and we look at the dividend, it is a 3.12% dividend. Year to date, you're up 0.14. Over 1 year, you're up 3%. So it's not one of these that's going to get you a ton. Doesn't get me super excited, but Cisco, I like it. Another one, and there's a few others that I will put in the newsletter, but I won't do here, but Starbucks. Starbucks is under $100. It is down 1% today at 91. The algorithm gets you in at 92. Okay, the algorithm on this one does not really work well because this has just been a solid stock. It is a broken stock right now. And if we go and look at Starbucks in Seeking Alpha, this is going to be kind of food, I think, is what they're going to put it under. We'll look at this one. It's got a hold and the quant, but Wall Street and Seeking Alpha analysts say, buy it. If we look at the valuation of this and some of the target prices, target price is 112. The PE is 25. The forward PE is 19. 2.5% dividend. Over 1 year, you're down 12%. Performance year to date, 3%. It's coffee. I mean, it's simple as that. If you buy coffee and you like coffee, buy it. I wouldn't expect this gap up here to get filled anytime soon. But you can see from Seeking Alpha, the valuation is D-. They're saying it's a little bit expensive. It's ranked 17 of 44 in this in the restaurant stocks. Darden Restaurants is the number one. So if you want a little bit better of a thing, I just think Starbucks is too good of a company to actually be under $100. Now, I could be wrong, but when I look at the long term of this one, it has had a meteoric rise. You're under the 200-day. What has happened every time you've been under the 200-day in Starbucks? You kind of crossed above it. So I even if we look at a monthly on this one, I think you might just be above the 200-day on the monthly. You're well above the 200-day on the monthly. You're kind of hanging on that 50-day. But, I mean, it's just been a meteoric rise. And you're seeing the MACD is just kind of down here. If you don't want to buy it here at 91, I'd probably wait. Maybe it gets under 90. That might be a good one. So there's other ones, Lynn, LMT, not a huge day. So I'll be back tomorrow. Remember, get any of the specials. I showed you a ton of Seeking Alpha. That's where I think the value is. $50 off. It's $189. Webull, I said in the beginning, I love their charts. If you have TrendSpider, look out for that mobile app because I do really, really like the mobile app. But Webull has a great charting program on it. Newsletter, it's free. Sign up for the newsletter. I'll put stuff in there today that's a little bit more than what I went into here. If you make money, I just ask that you gift me. So if you invest in stuff and you make money, if you don't make money, do not gift me. Maybe invest in the tools to try and make a little bit more money like TrendSpider and Seeking Alpha. But if you gift me, Venmo is my preferred, PayPal or Cash App. They're all down here. If you don't have Venmo, you can sign up for Venmo. That's my personal favorite one. I did start a Reddit community. for the daily stock pick. There is nobody in here. I am the only member right now. But if you'd like to join the Reddit community, it's r/daily stock pick. And that I started a Reddit community so that some people I can start putting some stuff in there. It does seem to be a way to get the podcast a little bit more out there, and there's some good it's not private like the Facebook group. So I may ban members. This one just seems like it's an easier way for me to have it out in the open. If you want to join the Facebook group, all of the socials, by the way, are up here. You can join the Facebook groupers right here. This is Substack. That's to gift me. I don't know why it put it in that form. Maybe I have to resort this. Yeah, I have to resort it. But yeah, you got the threads. I'm on threads. I'm on all the social media. So, okay, I'll be back tomorrow.
Every morning I wake up to the sound of the trading bell. My heart's